And of course, I introduced our MD while he was still greeting a few people. We'll be starting shortly. I want to just know whether the presentation is up. That. And so let me invite him. We only have 2 items on the agenda. The first is the presentation. After that, we'll take the questions. So let me invite our managing director, the gentleman from Nyim Nyim. We all now know Nyim Nyim. He has been able to, put it on the map. Patrick, I'm not saying prior to that it wasn't on the map. But let's invite Patrick to tell us a story as we wait for his presentation. Okay.
I think, Barbara, there's an ambush. We are going through appraisals right now. So, colleagues and please, members of the media, thank you for coming. My apologies, the presentation should be on in a couple of minutes. Many of you may know, as Barbara mentioned, I'm from Nyim Nyim. By the way, it's a real village. For many of you who may not know where it is, 14 miles on Mbale to Road, that's halfway, make a left, 4 kilometers, you'll be there. You won't get lost. Just ask where is Nyim Nyim, they'll tell you where it is. Chama can hear you laughing. And actually, it exists. He knows my rebel. Hey, okay. No, we have turkey, we have chicken, we have goats. Everything that you want under the earth is going to be in Nyim Nyim. This weekend? Okay, that sounds a good idea. But we can actually do that. I guess, guys, it has been an amazing year for us as a fund. And I think as when we get to eat for the members, you'll see as we share with you the results of the operation. And I couldn't be more proud, but of the team that Barbara actually did introduce. We all have roles, and most of this heavy lifting is done by the leadership team of the fund. I mean, right from the ministers to the board, and then members of EXCO, as they've been mentioned here. And then we have a whole group of foot soldiers. Some of them are sitting on that desk. Let me just ask them to stand. Christine, I can see you are there. Can you stand and wave? Yeah, Christine, thank you for waving. All right, and sitting next to Christine, please. That young lady is the one, our newest joiner, please. We grabbed her from somewhere. Then we have one of the digital team. We've got Mr. The guy who runs all those things. Then we've got a team sitting on this other side, please. If you're from the fund, just stand up and wave a bit. Then I have John. John is where? John is there. John is the one who does a lot of marketing. He understands digital like the back of his hand. Thank you, John. Standing next to John is Joseph. For many of you who look for advertising, please talk to him. And then the person who actually coordinates all our communication, we've got Tito. Tito does all our presentations. Many of you may not know, in end of this month, there's going to be the International Social Security World Forum in Malaysia, Kuala Lumpur. All the Social Security funds are going to assemble. So one of the things they wanted was to find out if Social Security funds could actually submit something they've done that's amazing as to where. I found out yesterday there were 258 entries that were made from across the world. And these are Social Securities based all the way from the South America, North America, Europe, Asia, Australia, and Africa. They picked 15 as the best videos to showcase what the security funds are doing. So they picked 5 from each category. NSSF Uganda actually made 2 videos that went into each of the categories. When I looked at that list, it's the only fund that actually was able to have 2 videos in each of them, and that is actually a lot to the work that the marketing team has done. One was the High Innovator, the women cohort, which was incredible. The other one was the Career Day. Apparently what we are doing, no other person is doing it as well as we do. So we hope by this end of this month, they'll be announcing who the winners are. We hope we will be in that category as it was. At least we try to showcase that. And the person who really was very good at putting that video was Tito. Tito, I know Tito, you're hiding somewhere. Please wave. And then Victor. Victor is the one who does a lot of our communication. Many of you know who Victor is. All right, are we ready? Victor, we're good? Okay. You know, one of the things we are doing is, as we are finishing, one of the things that we realize that sometimes you have to cross-check the numbers so that in the numbers we share with you are cross-checked, are audited, so you don't come and say, well, you guys gave us a number that was slightly off. But I think we're all good. We had to confirm some things with the auditors this morning. That's why it took a bit of a while, and we're glad we did, because many of you have been through audit. Sometimes the audit processes, the number may change, and I'm not sure that it has changed. So part of the goal is to make sure that you have the most latest number you have. And we tell them, you're not changing this number. You say, no. All changes have been made. So as soon as we get that in, we'll get the latest in terms of what we do. So we are good? Okay, just about to get to it. 2 minutes. Okay, I've been told 2 minutes, which I hope we can do. So now, Mr. Wera, you have something for us for 2 minutes? Okay, Mr. Wera is here. Please come. Now I can make fun for some of you ladies who've been looking for tall, handsome young men. He's taken.
No, thank you very much, Patrick. As Stephen said, I'm not from Nyim. I'm from somewhere up north. So maybe from me, it's just to welcome you to this day when we interact with members of the media around our operating performance for the previous year. So it's just to welcome you, to thank you for coming, always engaging with us and giving us the time to tell you what we have done for the year and to continually hold us accountable as we,
introduced. My name is Gerald Paul Kasato. I'm also not from Nyem, fortunately. But mine is also to welcome you to this event. We don't take it for granted. We know a lot is expected of us because of the position we hold in the financial services sector in the country, having the assets that we have and the money that we manage. I know a lot of people are anxiously waiting for the day the minister will unveil the interest rate for the year. But in the lead up to that, we have this sort of conversation with the media to kind of prep the public in terms of what is expected. So the big presentation is coming. We are just getting a few, technicalities sorted. As I indicated, mine is just to welcome you. But we are not short of tall men at NSSF. So as Mr. Cham comes, I will also invite Mr. Stevens. This is not a delegation upwards. So he'll come and say hi to you. And then Mr. Cham can come, and then we can get into the presentation.
Good morning, ladies and gentlemen. You know, in my culture, they say if the big man asks you to jump, you just ask how high. Don't ask questions why. But happy to have you all here to continue with our tradition of transparency. We've already said that at NSSF now, we are very transparent. Any information you need about your membership, any information that you need about yourself, we'll provide it. Even if you wanted to ask my colleague Agnes whether we have that title for Tema Angalo, you come, she will show it to you. because people always think that we don't have those titles. But thank you very much. Patrick will be taking you through what our performance is like. It's not finalized, but we have the general idea. And that's all I can say. Thank you very much for being here.
Now, Cham, please come and charm us. Thank you.
On behalf of all the short people in the house, I was beginning to feel left out. But anyway, mine is not a testimony. I've been writing about NSSF for the last very many years, I think since 2003, when I was a journalist. And you know, when you're writing, sometimes you feel, I have a lot of friends at the fund and you feel compromised. But I got to taste the goodness of what we've been writing about. The 2nd of May this year, I turned 45. I'd been counting for the last 2 years, waiting for that time to come. And I even went around inquiring from friends like Bush, who were a little bit older than me. But what I can say is that money has since been eaten. So after this press conference, please don't follow me. But I just wanted to thank you guys for taking good care of our money and making sure it is available when we need it. Thank you. And by the way, I was not on program.
Okay, I think it would be just worth it before we start. Agnes, please. We had all the bulls' voices here. They may think, please, and then we'll start.
I thought I'd survived that. Morning, ladies and gentlemen. I add my voice to my colleagues to welcome you to this session, to thank you for believing us and trusting in us. Thank you, Cham, for that testimony. I think for me, that's the perfect way to start the day. I thank you. Over to you, MD.
Cham, we took 3 days. I think we delayed. Many times we could do it in 1 day. So I think you may have some issues. We're trying to... You could. Okay, I think we're ready to start now. So we'll just talk a little bit about the year, what we saw during the year as we do it. This year, actually, 24-25 for us turned out to be quite a good year. Because if you remember the year before that, we're just coming out of parliamentary disruptions and that we had. And coming through here, we're now consolidating all the energies that we had to exactly do what Cham talked about. How do we provide to members better services? How do we help you trust us more in that case? We're in a financial institution where trust is that asset we can't afford to basically ignore. So when we look at our economy, the economy was at 6.3% compared to the previous year. And keep this in mind as I go through the next slides. The economy grew by 6.3%. Inflation remained under control, and the rest of it we'll actually see and the implication for it. So at a macro level, basically our inflation kept at 3.8%. And guys, sometimes we know we have got, thank you. Sometimes we have a lot of things that are not going right. But at least we can give credit to the central bank and Ministry of Finance. Managing inflation has actually been one thing they've done very well. And it has implications for us, has implications for the rest of the things that we do. And that has really been wonderful in terms of CAM. When you look at the interest rate regime, interestingly enough, in Uganda we saw yields increasing. The 10-year bond went from 16.02 to 16.86%. 20-year bond increased from 16.73 to 17.61. For some of you who really look at investments, guys, if you have some money on the side, please go buy a bond. This is the safest place you will put your money. Many of us want to go and buy a land. It's okay to build your house. But when you want to call it an investment, yeah, it may grow up in value, but you have no idea it will. You're speculating more than actually investing. Kenya, the bonds actually, there was a massive decline in the yields in Kenya. Look at the 10-year bond decline from 17.3 to 13.38%. And these are the markets we play in. Tanzania was kind of a mixed case, but for most of the 15-year, the 20-year bonds, those also declined. So in Uganda, you found the rates going up. Kenya and Tanzania, the rates were lower. If you look at the stock exchange, in all the markets, USC, Nairobi, Tanzania, Rwanda, there was an upward movement in the stock exchanges across, and the impact were what we do. If you look at the shilling, now this is where it gets very interesting. Our shilling strengthened against the dollar and the regional currencies. The Kenya shilling, against the Kenya shilling, the shilling strengthened from 28.7 to 27.8. And I'll tell you where the implication of that comes. In terms of the dollar, the shilling appreciated from 3,709 to 3,554. In Tanzania, our shilling appreciated from 1.4 to 1.36. Against the Rwandese franc, the shilling appreciated from 2.83 to 2.50. The Uganda shilling, when you look at the region, actually in Africa, it's the only currency that actually has strengthened against the dollar. It has implications for this. If I owe money in dollars, the day I get to pay for those dollars means I need less shillings to pay for those dollars. For example, if I owed $10,000 last year, if I paid that loan last year, I would have in Kenya, and I bought that cow last year. Because I keep my books in Uganda shillings, I paid 10,000 Kenya shillings for that cow. I would have recorded that cow at 28,000 in my books. Are we together? But this year, the exchange rate is 27,000 shillings in my books. I still have the same cow. It's just that the accounting requires me to revalue that as we do that. Okay, so when we look at the fund today, basically we pretty much invest in these three asset classes. Fixed income, about 80.5% of our allocation this year of our assets were in fixed income. It tells you this. If we had to close this fund today, I think in 3 months we'll pay 80.5% of our members because the monies we have are tradable. This is the bonds we have, very tradable. We have about 13.3%, real estate is 66.2%. I usually tell our members, pay 80% of our members within 3 months. The rest of the members will pay them within the next 6 months because we have to sell the land, we have to sell the building, we have to sell all those things. But it's a fully funded fund. All the liabilities are covered and all the members would get paid in that case. Between 2015 and 25, if you guys remember, we set up what we call our 10-year strategic plan. And we had certain targets for that. Now, how have we done in that area? If you look at our fund assets, remember I told you that the economy grew by 6.3%. The fund size grew by 17.5%. We outgrew the economy. Not just the first time, but we actually outperformed the economy in that case. When we set up the target for our 2025 vision, we had estimated and predicted that by June 2025 would be a 20 trillion shilling fund. We're coming from a 5.5 trillion shilling fund in 2015. So we had basically projected that by June 2025 would be a 20 trillion shilling fund. We did not count on COVID. We didn't know COVID was going to be around. We didn't know that Parliament was going to probe us seriously. We didn't know that Cham would come for his midterm in May. Because by the way, if you look at the midterm, I think last year we paid over 600 billion shillings in midterm assets. In spite of that, we ended June 2025 at 26 trillion shillings. 6 trillion shillings higher than what he had projected in 2015. And a lot of it is really what you, the members, trusted us with in that case. This growth was driven by a couple of things. If you look at the contributions that came from members, We had a 10.4% increase from the previous year, 2023-24, from 1.93 trillion shillings to 2.13 trillion shillings. So many more members saved with the fund. If you look at what we call our total revenues, this is the earnings we make. We sweat it out for you. The revenues grew by 38%, from 3.2 trillion to 3.5 trillion shillings this year. And this is in spite of where we're investing. We talked about the yields in Kenya were lower, but all this put together, the fund earned 3.5 trillion shillings. And you can see that our interest income went up from 2.34 to 2.88 trillion. Real estate went up from 13.24 to 16.64 billion shillings. And dividend income increased from 175 billion to 138.14 billion. And one of the things that we're really glad for, the investments we made in MTN and Airtel just came out stellar and performed so well. We used to get most of our dividends from counters like in Kenya, but this time the stocks that we put money in this country served us well and serves the member well in that case. So our total revenues went up by 11%. Let me see. These are now what we call efficiency ratios. Efficiency is measured by two ratios. In banking, they call the cost-income ratio. Out of which 100 shillings you generate as revenue, how much do you spend in costs? The average for the banking industry in Uganda is right around 51%, if you take all the banks together. So each 100 shillings they generate in revenue, they spend about 50 shillings in expenses. NSSF, that number is 7.9%. In other words, each 100 shillings we generate in revenue, we're only spending about 8 shillings in expenses. And that number came down because last year it was 9.4. Last year we spent 9 shillings, 9.4 shillings. This year we spent 7.9 shillings to run everything that you have, that you see as a fund. The next ratio, which is interesting, is what we call, is called the cost of administration. The cost of administration is a global standard for pension funds. What they do is you look at all your total expenses divided by your asset base. Globally, for a fund our size, 26 trillion shillings, right around 7 point something billion dollars. The global standard is around 2.1%. The fund last year was 0.88%. And that's compared to the best of the best in terms of just being able to sweat your assets and make sure that you improve on your efficiencies. These are the benefits we pay. Many of you know now. He talked about one we have. This is how much we paid and injected back in the economy. Remember, we collected 2.3 trillion shillings. We invested that money, but we also injected back the money as we paid the benefits out. This year, we paid over 1.3 trillion shillings, up from 1.1 trillion shillings that we have. The number of people who actually claimed their money was slightly less. Last year we had 44,000 members who claimed their money. This year it was 43,500 members. So, Cham, your money, guys are getting their money and they come in. The most interesting statistic that you won't even believe is the number of people who have chosen to leave their money with the fund. They are eligible to take their money, but they've chosen to keep it. In 2022, that number was around about 51,000 members over the age of 55 who could be eligible for their money. They held together around 610 billion shillings. They left that money, and by the end of this year, that number has grown to 79,000, and they're holding close to over 1 trillion shillings. They could take their money, they've chosen to leave it there because at the end of the day, they figured out that it's a better investment for them than if they went and tried to gamble in that area. So many of you, even when you become eligible, I know Mr. Cham was very anxious. He was counting to come, but at least now he's tested. The rest you can live until you are 80, and you can be fine. So we paid 18% of benefits. That went up much. This has been an amazing story, Smart Life Flexi. In November 2024, we roll out the voluntary program. You're not required by law to save with a fund. You can open up your own account as low as 5,000 shillings. By the end of June, we had slightly over 38,000 new accounts. they've saved 27 billion shillings. Just imagine. Now, it defies logic because many of us think that Ugandans do not save. We do. But we normally save in land, in cows, in goats, and the rest of them. They just wanted, they save in women. You are lucky. But people just wanting a way that they can monetize and save this money. There's a lady in Owino Market, an amazing lady. We went there, camped in Owino Market for 2 weeks. She signed up in March. Between March and June, 4 months, she made over 220 deposits. 5,000 shillings. She would send one in the morning, in the afternoon, in the evening. She would just send 5,000 shillings by phone. And I met her the other day, an amazing lady. So I said, excuse me, what happened? Why is that she was motivated because, you were talking about women saving. My friend, apparently she used to take money back home in a money box. One day the husband came back home and became the bank robber. And she learned her lesson that her money was much safer with a fund than under her bed. So you get these incredible stories, small amounts of money and people saving. And slowly, one of the things that's very interesting is we're looking at her balance. I won't tell you how much it is now. But she's already exceeded 1 million shillings. Just by faithfully saving a little amount. Because saving is not about lump sum. Yeah, if you have a big amount, bring it in. But the consistency and the discipline with which we then approach saving is what makes the greatest difference that we have. So that's just basically Smart Life. We're going to introduce some other things here. Barbara is talking about Smart Life Fix. Smart Life Fix will be an amazing program. Many of you in this room, by the time you retire, say you have 100 million shillings. Let me even put you've been earning 1 million shillings a month. We can take that 100 million shillings, say, don't take it to work, let's fix it for you. So for the rest of your life, you'll earn 1 million shillings. So your lifestyle doesn't change. And you can earn that 1 million shillings for your lifetime. Your wife comes along, earns 1 million shillings. Your children comes along, and suddenly you've planned well for them. That's Smart Life Fix. We're going to be rolling it out soon. And please, guys, tell your guys, if you take 100 million shillings, the moment your relatives know the money is in your pocket. Cham was telling you, please don't. He mentioned 3 months after I had got the money. Because we know that as soon as that money is in your pocket, it just burns you. Everybody who has a problem will show up. Even who should not die will die. And suddenly you have to be able to take care of those things. This is a target we set up for ourselves. Customer satisfaction, we measure this index at 88%. We improved from 87%. One of the most interesting things, just look at what happened. During the probe, one of the things we're concerned with, what are you members going to think about us? But look at that. 86% is during the middle of the probe. It held. For some reason, you members basically trusted us more than the parliamentarians did. The most interesting thing is we got more money during the months of the probe than the months before the probe. People actually trusted us and did not believe everything that we're going through at that case, at that time. If you look at our staff engagement, Cham just talked about this. This is something we really get proud of, because 86% is when we're just coming out of the probe. Now, slowly by slowly, our staff are getting confident in terms of serving you. And one thing I like, it doesn't matter where you go to. If you're in Arua, you're in Moroto, you're in Kabale, you're in Mbarara, you're in Mukono, the service levels you get are going to be equal to none. Because we want you to feel NSSF. It doesn't matter where you go. You feel it. There are things that our staff do that you cannot teach. So I'll just tell you a story that, so one day I was in a worker's house and this lady comes in, and the lady is wearing a gomasi. She's middle-aged. You can see she's intimidated. In my mind, I'm thinking, oh my goodness, where did she come from? She is dusty. So in my mind, she must have been on a taxi, or on a pickup, or on a lorry, and she came. So she walks in worker's house, and you can see it's just intimidating. She doesn't know what's going to happen. She walks in. We have this customer queue card. So she picks a customer. This young lady walks over. She sits. And she's wondering what's happening. I'm watching, and this lady, one of our staff, customer service officers, goes to this lady. Please forgive my Uganda, if you know I'm from Nyem. She asked this lady, Nyabo, kuletere kutuzi. Is that the right word? Uh-huh. So she went, and the lady, got a glass and brought her cold water. And you could see as this one was drinking this water, there's just some smile that's broke out for her. You can't teach that. You cannot teach that. And that to me was the epitome of customer service, that you can observe a member who has come. She may have been stressed by border guys, stressed by a matatu tout, but here she comes in the fund and she can get refuge. And for that brief moment, she gets treated with respect that she needs. And that's something that we want to pride ourselves on doing, that we can actually share this with the rest of Uganda as we do that. The only one thing that helped us, which was a bit of an issue for us, is the compliance rate. We measure compliance this way, that compliance is if you are an eligible employer, you send in your contributions by the 15th of the next month, and you send in the whole amount. That's what we call compliance. Anything else is not compliance. If you send your money the month after, you are non-compliant. If you are supposed to send 2 million, you send 1 million, you're not compliant. So what happened this year is we found our compliance rate went down. But it was a good thing. For the simple reason is, remember the load dropped, so we have more employers now in our database. And we're trying to help them understand you need to comply. And it will take a while to convert all of them to be compliant. So it's a good thing for us because now we've got a larger database of employers. The denominator is bigger. As we convert them, we expect then the fund will even grow much better. So one of the things that you guys can help us as you do this thing, just tell the employers, please comply, because your employees are missing out on something that's actually great. So if you look at this, so what's the implication of all this? And I think this is what Barbara was talking about, and I believe that's what Ken and even Jera is talking about. Next Monday, on the 22nd, put all this together. The minister will have to make a decision and make an announcement, the interest that our members will get. The one thing at least we know is we made a commitment to you that we will pay the members a minimum of 2 percentage points above the 10-year average inflation. So if you want to really figure out what the minimum is, just look at Bank of Uganda. You'll get the last 10-year inflation, add up, divide by 10, add 2 percentage points. And that will give you the minimum he should announce in that case. 2025 is behind us. We are looking at 2035. And this is basically for us what we call the Vision 2035. Simple strategy, 50% coverage. Right now, we have a 12% coverage. We want more members, we want more Ugandans to save with the fund. And by the way, that is causing, we are now going totally outside the box in how do we bring more Ugandans to save with the fund. And what we've made a determination is we have to create value for those who would be members for them to join the fund. The High Innovator, we funded 438 startups. They're growing. We have 38,000 members from them. They've contributed over 2 billion shillings. Several 2 billion shillings. So as we create jobs, we create members. One thing that we're going to get into agriculture, we're going to create value for the farmer. And as we create value for them, they'll become members of the fund. We expect to grow to 50 trillion shillings by 2035. That number we think will exceed. Right now we are 26 trillion, so we think we'll exceed that number. Finance guys are saying, well, I think we'll look at wherever it is. But that number we should be able to hit. But doing it without dropping service levels, a 95% increase in our customer services, our staff services. So we'll not expand at the expense of service levels. We'll make sure that we keep the service levels that we have. And we think the last 10 years has shown something that we can actually exceed these targets that we set out for. And on that note, thank you very much. So I think, Barbara, yeah.
Thank you so much, MD. Another round of applause for him. I think you can see from the numbers that have been shared that the performance was really, really good. And I just want to touch on 3 key things that the MD mentioned. The first, total assets. I think it's very impressive that over the last 10 years, you see that we have actually delivered on Vision 2025. As the MD said, we now stand at 26 trillion, which is, I think, remarkable, given the fact that, as he mentioned, we're standing at 5.5 trillion in 2015. So I think that deserves a hand clap. And this is why we need to clap, because it's evident that more and more Ugandans are saving for their retirement, and the members are actually trusting us with their money. And you are the members, we are the members. So that is really very impressive. The other thing that the MD mentioned is customer satisfaction. We are standing at 88%. That means almost 9 out of 10 people are happy with the fund, which is because, of course, in math you have to round off. If you're at 8.8, round off to the nearest whole number, that takes you to 9. So if there are 10 people, assuming each table is sitting about 10 people, if you asked them, are you happy with the fund? 9 would tell you they are happy with the fund. And I think that shows that there's a lot of work that is being done by the team. And then, of course, in order to ensure that your members are happy, the people who are serving them have to be happy. And that number is 9.1 out of 10. So thank you so much. We are almost concluding the setup here. Please add 2 more chairs here so that we have that will be adequate representation. So we are moving into the question and answer session. This is when you ask all the questions that you want to ask. I know you must have been taking note and you want to now get explanations for the facts behind the numbers. So allow me to invite back our Managing Director, Michael. His middle name is Michael. Yes, okay. I'll ask, can we move this? Okay. So thank you so much, Patrick. And then we'll invite Gerald, our Deputy MD, to take his seat as well. Ken, the Acting CIO. Stevens Mwanje, CFO. Agnes Isharaza, our Corporation Secretary. Yes. You can move this. Thanks, Christine. Okay. So, Christine, are you going to help? Thank you. So, Christine is going to reach out to you with a microphone. If you have a question, raise your hand, she'll see you. First question is from Paul. Yeah. Name, we'll take about 5 questions. MD, I think that's fine. We take 5, answer those, and then the next batch. All right, so we'll take 5 questions, answer those, and then proceed to the next batch of questions. Thank you.
I'm Paul Busharizi, the New Vision. To put you on the spot, over the last 10 years, the fund grew 5 times, from 5 trillion to 26 trillion. And now your target is to double it in 10 years. Aren't you undershooting what should be your actual target? And secondly, could you please give us an update on the progress uptake in Luboa and the progress on the pension towers?
Name and media house.
My name is Sierra Kabona. I work for the East African. I don't know whether Paul looked at my notes. I was sharing with Barbara something about also real estate on Luboa. But also I wanted some update on Temangalo and Bukere. What's the uptake? Inquiries, which market class is showing the appetite for those assets and properties, and maybe the challenges that you as the developers are facing. Thank you so much.
Thank you. The next.
Yes, good morning. Thanks for the presentation. My name is Ali Toha from New Vision. I just wanted a bit more explanation in terms of the trends we are seeing on the dollar. You did explain a bit of the impact in terms of the assets, but offer more explanation maybe to a saver like me. If the shilling continues to strengthen, is it very good news in the long run, or it's a short-term happiness that we should be celebrating? Two, since the NSSF Amendments Act of 2022, you had quite a robust campaign going to some of the employers out there. Could you give us an idea of how many companies have really complied, or how many companies have, in terms of the growth of the numbers of savers? I didn't see a bit growth in terms of the actual savers grow, but we had that campaign.
Work for the monitor. My question is about where did the fund lose money? In your presentation, the MD, it was all rosy. You gave us good figures about the growth and all that, but you didn't give us where the fund lost the money. Thank you.
Thank you. Good morning. My name is Stuart Ampile. I work with Chimp Reports. You've talked about the member contribution growing to, is it 10.4%? Is this strictly formal, or is it also from the informal sector? Thank you.
Okay, can we take those? All right.
Barbara, what I think we can do is let's see the one from Paul about the Luboa and pension towers. I think Ken will take that. In terms of actually also Temangala and Bukere, you'll take that. Stephen, you'll take the question on and we're shooting ourselves short on the 50 trillion. I think that's where his thing was. So, and then trends on the dollar, I think Gerald, you'll handle that. Is that good for us in terms of what we have? NSSF amendments, the idea on how many. Barbara, you have that one? Okay. And then where the fund lost money, we'll give this one from from Stephen, and now from Chimp Reports, formal or informal sector. Agnes, you'll try that. We'll handle it together with you. Okay. All right. I think that's how we'll distribute it. Go ahead, Stephen. No, sorry. Ken.
Okay. Thank you, Patrick. I will start with the question from Paul and Mr. Kabona around Luboa. An update on that. So, just to give context, NSSF invests primarily in 3 asset classes. The 3 are your government bonds, you have your equities, listed and unlisted, and then you have real estate as well. Now, within the real estate segment, we look at various subcategories. You have your residential real estate, you have your commercial, and a couple of other areas. So Luboa being within the residential subcategory, we did categorize that as one of your luxury residential properties or projects. And this is a project that we developed in 2018, completed in 2022 towards 2023. And over that period, we have been selling the project. So we have 306 units at Luboa, and there are different house types there. You have your villas, you have your townhouses, you do have apartments and bungalows. So in terms of an update on where we stand currently, of the 306 units, we have offered and received cash deposits on about 203 units. We do also have interest from an off-taker for about 40 of the remaining units. That is for rental purposes. So that will leave us with about 243. So from that, you can tell how many units are left. We do have about 60 or 62 units that are left for sale. Then moving on to pension towers, it is important as well that I offer context in terms of NSSF. As you're all aware, NSSF is a public institution, and as we undertake our investments, there are certain rules that we have to abide by. In our case, we do have to follow the PPDA law, which guides us in terms of how we go about a number of our activities, especially in the area of real estate. Now, you do find that ideally, as you go about the project, and you do have areas where you have to make adjustments and you do have to make some changes here and there, you know, these are not decisions that you can just take unilaterally. You actually do have to rely on stakeholders. The PPDA being one of them, we do have the Attorney General's office and a couple of others. I must give credit to these institutions that increasingly they are understanding the NSSF business, and they have been very supportive of what we need to do. So that being said, and to answer Mr. Paul's question directly, at the pension towers, we are at 85% completion, with the remaining works basically, or rather the procurement for the remaining works being undertaken so that we can be able to complete the project. Then moving on to Mr. Kabona's question on an update on Temangalo and Bukerere. Indeed, at Temangalo, we are currently developing. At Bukerere, we do own land there. As I mentioned earlier on, and I would like to again give context around this, you know, we play in the space of residential developments. I did indicate that you do have Luboa, which is seen as your up-end market product, luxury product. We have increasingly been getting feedback from the market that, you know, we need to also develop residential properties that many of our members and many Ugandans can afford. Obviously, we understand that our mandate is to invest for a return. Unfortunately for us, we have been able to deliver a return on the projects we developed. But we also believe that we can speak to the aspirations of our members around home ownership. while also pursuing a return on that front. So in light of Temangalo, we are offering residential properties to the mid to lower end segment of the market. And again, we do see our role as NSSF in a broad sense, not just to bring houses to the market, but to define the housing space. So again, just like what you see at Luboa, we have an organized community at Temangalo where we are offering 550 units of various house types, similar to the ones that we did mention at Luboa. And we believe that even as we bring about affordability in the real estate space, we also want to ensure that, members and Ugandans can have a decent living while the NSSF members are able to generate a return from that. So that is the update on Temangalo. On Bukerere, quickly, we are looking increasingly to convert our vacant properties or land into income-generating properties. And that is where now Bukerere comes in. We are looking at also developing something there. We plan to explore various concepts for that. I cannot speak to a particular concept being developed for that, but what you will see increasingly going forward is that we will work towards converting our low-yielding assets into higher income-generating assets in order to be able to deliver higher returns for our members. So thank you very much.
Stephen, Antiwish, shorting out strategy. Is that a follow-up?
Yeah, I think I skipped something now. The last time we visited that site, there was some work going on. Where?
Which site?
Temangalo. Actually, construction had started. I expected the speaker to tell us maybe 10 units are complete, occupied, or at this level. That's the answer that I wanted from you. Thank you so much.
All right, Mr. Ken.
Thank you, Mr. Kabona. So Temangalo is still an active construction site. We are currently at about 55% completion, and our expectation is that within the next 12 months at least, we should be over 80% completion on the project.
Okay.
Thank you very much. Let me start with Paul's question. Paul, you say that if we say we are going to collect 50 trillion, and we underestimating, given the success rate we have shown. But if you go, I think Patrick has pointed it out that right now we have been collecting in the corporate world space where everything is organized. But we are spreading ourselves out to the informal sector, which over 70% of Ugandans are. And here we are looking at institutions, have one employee or 2 or 3 without formal documentation. That is not as easy a sector to collect from like the one we have been collecting from, because already the corporate sector has its challenges. But you have to, and then also the levels of incomes of people who are in those sectors are not as high as probably you see someone who is working in a bank. So when you put those metrics together, actually 50 trillion is a very ambitious target. We're even questioned by our board whether we'll be able to achieve it because we have those statistics. But like Patrick says, we will never aim low, we aim high. And of course, all of us, I think most of us here won't be here 10 years from now. No, I won't say we'll be dead, but won't be in NSSF. So I think the next team will be here and they should be, I'm sure they would have achieved. The second question was, I'm sorry I did not get the name, but I got the question, where did we lose?
Anthony.
Anthony, yes. Where did the fund lose money? That we painted a very rosy picture. If you listened carefully, the MD pointed out, he gave you the example of valuation of the cow. The cow at the beginning of the year was at 2,800 shillings, 28,000 shillings. At the end of the year, it was 27,000 shillings. And he told you that now that means in your books, you have to go and and show a loss of 1,000 shillings against that cow. So likewise, we are invested in the region and we are invested in dollars. The first thing that we got was what you call a valuation loss against the shilling. We posted close to 273 billion shillings loss there because of the shilling strengthening against the currencies in the region and in the dollar. At the same time, there's an elephant in the room we all know about. We all know about Umeme. Umeme is a company which had one major contract, which major contract was discontinued by the government. And in accounting speak, Umeme is no longer considered a viable going concern. Even if the company, I have to be very, very specific here, Umeme company is still open, is still operating. But from accounting position, the contract they had is no longer there. So what we needed to do was to write down the value of Umeme in our books. The logical thing normally would have said, you would have said that the share price at the close of the year, 415 shillings per share, we own just over 25%, multiplied by that number of shares, and say, this is the value of Umeme in our books. But now, because Umeme no longer has a viable, recognizable business, we had to look at what their net assets are. After they've taken all their net assets and all their what they owe liabilities, and look at that. What is left, we say what is left, we take our portion of 25%. So that portion is around 21 billion, but then that means we had to write off around write down 117 billion shillings. But all is not lost, because we know that Umeme is in arbitration. If the arbitration goes in favor of Umeme, every shilling that comes to NSSF will be a gain. But also, shortly before we had to write down, they had declared a dividend in March, which was very, very sweet. So we got 95 billion from them. So yes, we made some losses there. But all the other side of the coin is that also the MD told you that all the stock indices, stock markets of East African region performed very well. We actually gained 723 billion shillings from these stock markets. So if you get the 723 billion minus the 273, so we made a net gain. So did we lose money? Yes, we lost money. But in the big picture, if you look at the big picture, because we do not lose money, because that's why it's important that we don't put all eggs in one basket. Because 1 year, some assets, some investments might not perform as well as the others. But on an average of probabilities, all assets performed well. Thank you very much.
And thank you, Stephen, for that last part of it. I think the biggest, and he quoted the, don't put all your eggs in one basket. A very biblical principle, by the way, says, don't scatter your fields is one thing. The ideal diversification is exactly for that. And you want to approach your investment from what we call a portfolio perspective. Some will do well, some may not do well, but in totality, the portfolio does well. That's what you want to do, because each time you're making an investment, you're looking at the future, whose information you don't have. None of us can guarantee what will be there tomorrow. We don't know. But you balance it by the decisions that you make today. And I think that was an important, the important point that you brought across here. Thank you. All right, Gerald, is this dollar trending? What do you see? Is it good for us?
Yeah, thank you, Ali, for the question. He asks about the trends that we are likely to see on the dollar. Like Patrick said in his presentation, what basically happened is that the shilling strengthened against most of the major currencies. And Stephen has actually put it well, that the net effect of that on the forex side was a loss. But that loss was offset by gains overall on the equity market. So net, you have a gain. I think it is important to recognize that when we are recording performance and when you're recording performance at the end of the year, we take the total return. Now, in terms of whether the strengthening of the dollar is a bad thing or a good thing, it depends. Now, if you are an investor like the fund who is reporting in Uganda shilling terms, but then you have multiple currencies, whenever the dollar strengthens, you're likely to revalue down on account of what Patrick explained, that example of the cow. But if you are, now the question is it a good thing? There are different views because all countries, the countries that do well, you need to export your goods to the market. Now, the strengthening of the shilling against the dollar is not necessarily a good thing for a country that is relying to get export revenue, because what it does, it makes your goods uncompetitive on the global market. But to an importer, right, it could actually be a good thing because they are spending less shilling to get dollars to bring goods into the country. But the thing is that in all countries, usually policy encourages traders to export more than they actually importing stuff from the rest of the world. Now, in terms of the trend, we are likely to see a strengthening of the shilling in the short term on account of the flows that we see in terms of foreign direct investment. You know, there is a lot of activity going on in the oil sector. I think last year, when you look at the Bank of Uganda reports, our inflows, in terms of FDI, you had in excess of $3 billion. When you look at our exports, because coffee was doing well and it continues to do well, we had almost $10 billion in total exports. Net, what that does is that it means that your shilling is likely to appreciate against the dollar. So in the short term, on account of the good performance of sectors like coffee, good performance of tourism, the FDI flows in the oil sector, we are likely to see a strengthening of the shilling against the dollar. But of course, it remains to be seen whether that can be sustained. There are different views. Of course, we have a current account deficit. One could argue that in terms of fundamentals, that could suggest a weakening of the shilling, but that tends to be countered by the fact that demand and supply is also a factor that you consider when it comes to looking at the trend of currencies. Thank you.
A true economist gave you a nice. So, is it a good thing? Depends on where you stand at that point. The good thing is, at the fund, we're very cognizant of that, so we're making certain decisions. In other words, you're looking, okay, where do we think we need to be more vested in? And you're going to find out that we take advantages of these revaluations, that if in our mind we think that Uganda is going to be a better investment place, you'll find us more into Uganda than in the region in terms of what we do. So we're very cognizant of those dynamics that take place with the region. Secondly, simply because we had an interesting thing here that the Uganda shilling appreciated against the dollar and against the regional currencies. Now there's a possibility that what you're going to find that it will strengthen against the dollar, but the Kenya shilling also now strengthens against the dollar because Kenyans have done something very interesting. So then the exchange rate between the Kenyan shilling and the Uganda shilling neutralizes or even depreciates. So the dynamics are many, and it's not just a given that simply because the Uganda shilling has appreciated against the dollar, it also appreciates against the Kenya shilling. It was just one of those things that we have to get them. Barbara, I think the question was, since the NSF amendments, how many have we seen growth? Over to you.
Okay. Thank you so much, MD, and thanks. I think the question came from Twaha. Yes. About compliance. So first of all, in terms of totality, the amendments were in 2022, and prior to that, we were supposed to ensure that everyone employing more than 5 is registered. In 2020, our compliance rate was 51%. but we're looking at a smaller category of people. In 2022, when the president assented to the bill, our landscape increased, because that meant that even someone who was employing one person and is registered is supposed to comply with the NSSF Act. But you can see from the MD's presentation, we are at 52%. So in terms of the landscape improvement, yes, we have improved. Now, in terms of totality, in terms of registrations, have we seen an improvement of registrations? And the answer to that is actually yes. Based on the projections that we made during the strategy session, actually we're supposed to register 10,000 employers in the last financial year, and we're also supposed to register 180,000 employees. However, we exceeded those targets. We registered 13,967 employers and 219,542. So, and these projections were exceeded. So based on the performance, there's an improvement that we see. And we've also seen a lot of traction coming in from online in terms of registrations. We saw last year, actually the just concluded financial year, we registered 96,000 people, employees online. But previous year it was about 60,000. So we've seen traction. There's an improvement in terms of people actually joining NSSF, and even the compliance number has also improved. And then there was some aspect around informal and formal. MD, there was a question around, is the concentration only in, So maybe speaking to that, currently we have 38,000 people who have joined the NSSF Smart Life. NSSF Smart Life is a voluntary product, and it targets informal and formal people. So it's a form of way where we can see and say, okay, some of these contributors, like the MD said, there's this market vendor who is contributing, I think, 200 times so far. In terms of basically the sector presentation, those are the people now who are joining the fund voluntarily. And so someone might think 38,000 is a small number over a period of 10 months. However, it is not. Because when we look at the unit trust, which is also another mode of voluntary contributions, in totality, they have 35,000 people, and they've been around for more than 10 years. So we are confident that actually the product is speaking to the market. Compliance is also improving in the target group. And the fund is in a very good place. Thank you.
And maybe, Agnes, just to help the members who are here understand the legal implications and challenges of non-compliance, from just to make you guys realize that it is very expensive.
Thank you, MD. So maybe just before I respond to that, just for additional context regarding the issue of growth, as whoever asked the question, the colleague who asked the question, the amendment was in 2022. And the amendment provided for voluntary saving. However, it was subject to a regulation that was to be issued to operationalize that provision. This regulation came last year in November. So the growth, the numbers that Barbara has shared, are actually a result of just a couple of months' effort on the part of the fund. We've been able to do that. So it is expected that as we intensify our efforts in onboarding members from the informal sector and the category she talked about, the top-ups, we will see significant growth in this area. And that speaks to the strategy that you saw the MD share, the ambitious target of having 50% coverage of workers in the country over the next 10 years. So to answer the question the MD has put to me, our members know that it is mandatory by law for the formal sector. It is mandatory that employers make contributions for their employees. Again, significant change that came in 2022 is that the limit of saving was removed. So it doesn't matter whether you have one employee, provided you are a formally registered employer, you're required to remit contributions for your employee, to register and remit. What happens if you don't? It is an offense under the NSSF law, and the consequences of non-compliance will follow. And this is an area we've been struggling with. We received a letter from one of our employers the other day challenging us for taking them on. In our law, we have a right to actually institute criminal and civil proceedings and/or civil proceedings against our employers. Yeah? Of course, before we get to that point, we will engage. We will engage. But I think the point MD wanted me to emphasize is for our members to know that there are consequences. And increasingly, we are getting an outcry from our members, the employees, who have alerted us of their employers' non-compliance. You've heard about the whistleblowers. We probably need to talk about that. So our members should be able to engage us through the whistleblower channel and all that. When we get those complaints, they expect us to take action. In any case, we are mandated to do so by law. So yes, our dear members, our dear employers, please comply. If you don't, we are required to actually invoke the provisions of the law to enforce compliance. All this is for the benefit of the member, our employee. So there are consequences, and we'll be speaking a lot more about this in some engagements that we are organizing to sensitize our employers about this, so that they're not surprised when the long arm of the law takes effect. Thank you.
So forewarned is forearmed. There's just something I want to mention from what Paul said. You're talking about whether or not we are shooting ourselves. But I think last strategy cycle shows something. We had a target of 20 trillion, but we didn't stop because we reached 20 trillion. So if we hit 50 trillion next year, we won't stop. We'll still continue. I think that's something that we've followed up with. Thank you. Over to you, Barbara.
So much. I think that the team is doing very well. You're getting all your answers. You can clap for that. You're putting us on the spot. Let's take the next round of questions.
Yes, my name is Collins from NTV. Patrick, in 2023, you initiated an interesting idea of the national marketing company, which was supposed to off-take part of the agricultural produce. So far, how much have you invested of the proposed 60 billion, and what is its status? Then the second one is on the telecoms, we've invested in money, MTN and Airtel. So far, who's returning the best?
Sorry, we'll come back here. Let's sort out the people at the back, and then we'll come back here.
Hello.
Yes.
Yeah, I think I'm the next person to ask. Since
Oh, yes.
I have the microphone. Thank you very much.
Thank you.
Panelists, my names are Ambrose Gahene. I work with the Watchdog Online. I have just formulated a question out of the way you are answering some of the previous questions. I know that compliance to NSSF contributions are mandatory. But at the moment, with this world in which we are living of social media and social media world, you know, there are many media houses here in Uganda and even the region, which don't necessarily work. There are people who don't necessarily work with media houses based in their countries. You find somebody is a Ugandan here, but is working with the other Al Jazeera. Al Jazeera, you all know it, even a person who has never gone to school. You'll say, Al Jazeera, yabyogedde. But these people, do they pay NSSF? Because Al Jazeera is not based in Kampala. How do you track down those people? Including even civil society organizations. Some of them, they have employees based in these regional countries, Uganda, Kenya. But you find the civil society is based in the US. For example, Human Rights Watch. There are people who work for Human Rights Watch. How do you track down Human Rights Watch to ensure that those guys who work for them, at least when they get old, they have something to take home? Thank you.
Thank you, Ambrose.
Hello.
Okay.
Thank you very much. I'm Isaac Tugume from the Publicist East Africa. My question is, Mr. Yuta, you didn't mention anything about NSSF contributing to the national economy. The common man would like to know, how does NSSF contribute to the national economy? Do you pay some taxes? Such that if our money goes there, you convince us to contribute more, because we know at some point it is coming back in one way or another. Thank you very much.
Thanks, Isaac. Let's, just a second. There was a hand there.
Thank you very much. My name is Malcolm. I come from NTV. And my question is simple. I just need to go back to the dollar. There's a recent Reuters survey that points to further depreciation of the US dollar. And that is in this year, 2025. JP Morgan also projects about 10% more depreciation in the US dollar. The dollar question is actually very big. It's a big risk. So what does that mean to member contribution, to member returns in the near future? And what are you going to do about it? Thank you very much.
Thanks, Malcolm. Yes, please.
All right, thank you. My name is Charles Boji from Manan Markets. Mine is about the investments we've made in the region, the East African region. I know NSF made a decision to actually put quite some, good investment in Kenya and Tanzania and other maybe regional countries, but mainly Kenya. I'm wondering what has been the impact of, for instance, the depreciation of most of these regional currencies against the local unit. I think we saw the Kenya shilling losing quite some good value against the UGX, then same with the other regional currencies. So if you can shed some light on that. And then, of course, the underperformance of the regional exchanges, especially Nairobi bourse. How has this impacted us? And how are we planning to cushion ourselves against these vagaries going forward? I mean, what is the plan, the grand plan for that? Then two, I know, again, on the investment portfolio, we have quite a good footprint in real estate in Uganda. And over time, we are seeing rental income coming down in certain areas because of oversupply and all that. Again, do we have other areas, investment vehicles we are considering to actually cushion ourselves better going forward? Thank you.
Thanks. Any more questions? Okay. The last one, eh? Oh, yes. At the front here.
It's a follow-up on the regional investments. If we are to compare, Patrick mentioned you gained more from the domestic market. The returns were more on the domestic telecoms. Could you please kindly share with us how much you got from Vodafone, what you got from Safaricom, and could it be maybe MTN Rwanda? We may not access those figures, and for you, as a regional investor, you might be having, and maybe the reasons why the Rwanda, Vodafones, and Safaricoms gave you that much and little. Thank you so much.
Thank you, Kabona. I hope that's the right pronunciation for your name. Okay, it's all right. We can take your question. I think we'll wrap up with that question and then take these ones and then go for the next batch.
Yes, good morning. My name is Dogratius Wamala. I write for Daily Monitor. I have like 2 to 3 questions. One is on the bond markets in the region. I was looking at the yields. I see comparatively Uganda made really well compared to what Kenya and Tanzania made. But I understand that the treasury in Uganda is trying to force the market to accept lower yields. But you also see that in markets like in Kenya, they're introducing more, like for instance, the infrastructure bonds that can be quite lucrative. Why do you think the bond markets in Kenya, in other parts of the region, went down while Uganda's went up? But in the meantime, you also see that the treasury is trying to be bullish. It's trying to say that we are not going to accept higher yields in the domestic market. And yet currently it's the highest yielding. So here there are 2 questions. Why do you think the yields outside were low compared to ours here? And what do you think the fund is going to do onwards? How cautious is it going to be? The other is, I was looking at the revenue that went up 38% that Patrick showed us, and also the assets under management that went up by 17.5%. So here, I understand that the revenue is coming in at a high velocity compared to the rate at which assets grow. And the way I look at it is the assets in which the fund invests in on the domestic market are not that high, that many. So how is the fund, because it's the largest in this market, how is it trying to boost the capital markets that we have here so that we can have more returns from this money that we put in? Because when you look at the 17.5% increase is quite slightly higher than what the 10-year bond gives you of 16.5% right now. And comparatively, it could be like maybe 18%. The other ones are about the interest lag, because I understand that before the Minister of Finance announces the interest rate, the person who put money in NSSF in July 2024 would not benefit from the compounding that accrues after September 2025. So, and I brought this intentionally because I wanted to understand what is wrong. So many people in the insurance space are talking about it, in the pension space are talking about it, and in finance. What part of the law forces this lag, and what amendments do you think can be put forward to move this? And still on that, when you look at the opportunity cost, has the fund tried to compute the value of the money that people have been putting in while not accruing interest year on year, maybe as part of a percentage of the assets or in shillings? And the other thing is, when we compare like the global best practices, how do other pension funds do it? Do they announce interest maybe quarterly? Do they also wait for their treasuries to announce the interest rate? And the last one is, what if the parliament say that, yes, we are open for a conversation, we can try to move this forward? What steps could the fund do to align itself with that law? Thank you.
Okay, let's pause for now and then take those questions. Thank you.
So, Ken, I think take the one on the dividends out of MTN Airtel, how they've done. Also, the one that Kabona raised on the regional investments, they're kind of related in terms of that. And also, Charles raised the idea about the investments in the region and the rental income coming down. Gerald, I think you can handle this whole thing about the depreciation of the Uganda shillings and the exchanges and the bond market yields. One in Kenya and Uganda, what's happening in that area. Then, let's see, go to the fund. Stephen, the contribution of NSSF to the economy from taxes we've paid, benefits we paid out, and where we've made the investments. There was Malcolm, I think this can also deal with it. Malcolm raised the idea about the global perception about the depreciation of the dollar. That's supposed to be coming up 10%. What impact will that have on member returns? I think Agnes touched a bit on the compliance and mandatory, especially on these people who are working for companies that are not domiciled in Uganda. And then, let me see, I'll touch on two, the one around the NAMCO. Collins, you raised that question. And then the interest rate question that just Wamala raised at the end of it. Let me see, Barbara, do we have? Okay, that's about it. NAMCO. We floated up the idea of NAMCO. We've gone through a very rigorous process of getting it cleared for registration. I'm hoping that we'll be able to be done with it, hopefully by the end of this quarter. This quarter ends in 30th, Yeah. So we'll have it registered, which tells you something. Even when we budgeted and they expected money for it, we will not spend that money because we will not spend it until we have got an entity that's legally registered for us to do the work that we need to do. But once we set it up, it will be one of those things that we believe that will bring us a lot of value in terms of intervening in the agricultural space and bring farmers into the fund. I think that one. Let me touch a bit on something that I think, Charles, your question was actually answered by Stevens. I think your question was, what impact has the depreciation of the Kenya shilling had on our investment? And Stephen was very open. We've had a revaluation loss of about 274 because of that. Now, it's very important, sometimes when we use the word lost money, this is the revaluation. We wrote it down to reflect what the exchange rate is. And like I told you, we still have the cow. We didn't sell the cow. You actually get a loss, an actual loss when you sell the cow. But you have to revalue for purpose of accounting, so the cow is still there in terms of what we need. And the two, you raised the idea around the stock exchanges. As we showed, all the stock exchanges went up. In fact, what Stephen reported was we got a revaluation gain on the stock exchange of 723. So being in the region on a net basis, we actually gained 500 billion shillings. That was the implication of that. And finally, I will leave the interest rate question for last. I think let's answer the other ones, then we can get. Okay.
Okay, thank you, Jared. I think you've answered the question on the regional performance. So I will take on the question on MTN and Airtel, which one is performing better. And my response to that is that our investment approach is that we have a minimum return that we seek to get from certain assets that we hold. And when we make an investment, we have determined that that investment has met the minimum criteria. And with the passage of time, we expect to realize those returns. So looking at MTN and Airtel, we will not tell you that, oh, this one performed better than the other. But what I can tell you is that both companies are performing very well. They have so far met our return expectations over and above, in fact, what we had projected when we made the investments. So both companies are doing very well. Now, I would like to tie this in with the dividends that we have received from the telecom companies. And MTN in Uganda, we received about 61 billion, Airtel about 36, but also this is a function of the quantum of investment made, so the amount of investment that we have made in these companies. On Safaricom, we earned about 15 billion, while Vodacom was just under half a billion Uganda shillings. So I would say that looking at it from a sector perspective, this is a sector that is very well placed for the future. So you look at, for example, life nowadays, you know, one of the necessities in many homes is data. And these are the companies that play in this space, and this basically tells you that, you know, the demand for their product can only increase, especially in a region that is as young as East Africa and Africa for that matter. Looking at, you know, the regional bonds and NSSF contributing to capital markets, and what will the fund do going forward? As NSSF, we are always looking for investment opportunities, and that is why many years ago a decision was taken to move outside Uganda into the region. In fact, one of, if not the only regional pension fund that is actively invested outside their domestic country. And as Patrick mentioned, that decision has been very beneficial for the fund, but it's also a function of the available investment opportunities. So obviously, with the rate at which the fund is growing, the opportunities in Uganda might not have been as prevalent then. And therefore, a decision was taken to go to a region where the investment opportunities were available but also attractive. In light of that, we do expect that occasionally markets will move. You know, yields will go up, yields will come down, like we saw in Kenya and Tanzania. And we have seen that the geographical diversification then plays to our advantage, because we can then move into markets where yields are high, as it was the case in Uganda the past 12 months. But we have also had situations in the past where Uganda had lower yields and Kenya and Tanzania were offering very attractive opportunities, and as a fund, we did benefit from that. So we are continuously looking for opportunities across the region, and fortunately for us, we are able to move in an agile manner to take advantage of these opportunities. In terms of some of the things we are doing regarding capital market developments, NSSF is always actively looking for opportunities in different asset classes. And our long-term plan is that if we can identify young, growing companies with very high prospects, we can take stakes in those early with a plan to list on the stock exchanges in Uganda and the region. And then lastly, on the question of declining rental yields and what strategies we have to deal with this, one of the key strategies, as Stevens mentioned, is diversification. We do not only look at one area, we try to spread our risk across different asset classes. Within real estate, we do have assets that we are developing to sell space or for rent. We also have assets that we are developing for sale, like your residential properties. Increasingly, we also hope that we can diversify the subsectors that we can go into to be able to further diversify the kind of risk that we face while delivering a return that we are comfortable with. Thank you.
Thank you. Agnes?
Thank you, MD. Thank you for the follow-up question on compliance and how we enforce compliance for members who may not ordinarily be domiciled in Uganda. So the requirement of the NSSF Act is that the employer is registered in Uganda pursuant to the various laws, the Partnership Act, Companies Act, Trustees Incorporation Act, and government, for those who are not under the public civil scheme. So those are the employers who are required to be registered with us by law. And we work in partnership with URSB, with URA, to ensure that those employers are on board. Now, for purposes of the kind of employees that the gentleman who asked the question highlighted, what we do is, having identified these employers, we conduct audits. We conduct audits. During the audits, one of the key issues that we look out for is determining who the employees are. Because as a matter of fact, like the gentleman said, some may not have been registered. We also get, like I said earlier, feedback from the employees. So we will conduct audits to verify the actual status of the employees in the registered company, our registered employer. And based on the outcome, we will take the required action. You recall the consequences we talked about earlier. However, there will be employers who are not registered here, who are domiciled elsewhere. Our law has a provision for such employers to get exemption from the MD for purposes of their employees. We also have a category of accepted employers in our law who get exception through the minister. Now, one of the key considerations for such exemptions to be granted is proof that these employees registered with the employer not registered in Uganda are actually the beneficiaries of contributions similar to ours, okay? So we would have to verify that this employee who is working in Uganda for this entity is actually getting contributions which are similar to those that would otherwise be required here in Uganda. So that would be the basis upon which they would be exempted. Otherwise, if our findings are such that that employee ought to be properly registered with us as a member, we will then invoke the provisions of our Act to ensure that the employer actually complies with their obligations under the law. So that is how we handle that category. Thank you.
Okay, Stephen, Isaac's question, once you respond, I'm going to also request Gerard. I think the impact study that was done will actually show the depth of the impact the fund has made. So you'll share a bit about that.
Isaac, thank you for that interesting question. But I want to warn you, don't want to set us off when you ask us what our contribution to the economy is, because it might divert the intention of this and we start. But I'm going to give you quite a few. Let's start with taxes. This year, the last financial year, for example, we paid more taxes than the money we spent doing the business. Actually, 12 billion shillings more. We paid 242 billion shillings in taxes. And those are direct taxes. You are not even talking of indirect taxes related to the activities with other partners. Now, benefits, we paid out close to 1.4 trillion. Patrick has talked about it. And we all know the multiplier effect of when you get money getting to the economy and it's invested and what it does. We have financial literacy program. We started this program before COVID, and we are doing it online, and we are doing it actually physical at our head office, and we are enrolling 70 people. We put it online. By the close of last financial year, we had educated over 550,000 Ugandans, direct, and 3.3 million Ugandans in direct benefits. And this program is open, free of charge to any citizen of Uganda or any person resident in Uganda or even any person in the rest of the world who wants to get in. We have livelihoods. This is something that we have come up very new, where we're helping societies to grow. This is a kind of a selfish program because we enable you to empower yourself economically so that you can start saving, but we are also putting you into the money economy, where you're not. Patrick talked about where people have been saving in cows and goats and whatever. That's not monetized. Livelihood is helping you people, people to monetize and be counted directly into the money economy. We do. We are good corporate citizens. We are going to do the 7 Hills Run next month. From there, we've collected with partners, banks and telecoms and whatever, we collect billions of shillings where we help disadvantaged schools across the country in different regions. What else do we do? We boost the local economy because we are participating and investing in all the other companies. You know of the MTNs and whatever, but the other areas of investments where we do, where you don't blow too much, because you are more interested in probably in MTN, because that's where you also bought your shares. But we are invested. What else? We do, as you noticed, this performance comes from a lot of hard work and a lot of getting the best skilled persons on board. As a result, we get so many other companies from Uganda, private and public, to come to NSSF, and we teach them and we share information willingly without charging them. Now, as I close on this one of the key metrics for each of the persons seated here, before, part of the ways we earn our salaries, we make sure we have something that we're giving back pro bono, both our time, our personal time, and our departments. So we find she's doing, for example, she's doing a lot of trainings for magistrates court. She's doing the schools. I do a lot of, we help public companies convert to IFRS. We sit with them and take like 3 to 6 months of our time without pay. He does a lot of this. He does, if we mention this, we'll talk about this and the chicken come to roost. But what you can know, that NSSF is a big player in the economy, and we do support our country in so many ways. Thank you.
Thank you. Gerard, before you come, Ken, how much bonds did we buy last year? Do you have in Uganda? Do you have an idea?
So that number was about 3 to 4 trillion.
So 3 trillion to 4 trillion shillings we lent this government directly as part of the budget support. And that shows up in your roads, shows up. Now you can say the roads are not done. Okay, whatever you see done, that is part of the support. And the only entity in Uganda today where members, remember the fund is owned by you members, can directly provide support to the government. Over to you.
I think let me start from where Patrick has ended. That question on what the fund does to support the economy. I think Stevens should have added, but maybe it will come later on in the other questions and maybe at the actual day of the annual members meeting, that we actually, in addition to our annual report, every year, we also publish a sustainability report. And that one goes in detail in terms of what the fund is doing to the wider community. Now, last year, we did something that I don't think any entity in Uganda has done. We commissioned KPMG to basically, as a consultant, to measure the impact, the total impact of the fund for the last 10 years. So they collected lots of data from across the entire business. And actually, some of that study has been shared in our magazine, the Savers Digest. But let me restate some of the numbers. From that study, the consultant determined, and they brought in experts from Europe, their office in Netherlands. From that study, they established that the total contribution of the fund in the last 10 years is in excess of 60 trillion Uganda shillings. Now, compare the 26 trillion that Patrick reported today. That was our total assets at the end of the year. Compare that one with the 22 trillion, the assets that we had last year. But the total impact the fund generated in Uganda, by the way, this is not East Africa, because we were very specific. We told them we want you to measure the impact of whatever the fund does in terms of directly buying bonds, investing in companies like MTN, Airtel, building projects like pension towers, Lubowa, Temangalo to mention but some. They quantified each and everything. And by the way, they even took it a notch further to follow the members that we pay who qualify for their benefits. Like, Cham, who was here, who was very excited about his May paycheck. So they quantified all of that, and they established that in the last 10 years, we had contributed in excess of 60 trillion. But then we told them, okay, please break it down for the year 2024, because they did it up to the 30th of June 2024. We told them, okay, tell us what has been achieved in that financial year. This year we haven't done it because that study is still recent and probably relevant. So for that year alone, last year, The impact created was 32 trillion. Now you compare our total assets, which is 26. Last year, actually, it was 22 trillion, but you are generating an impact which is 10 trillion in excess of your total assets. For me, that one shouldn't be taken lightly. So if you want to feel what the fund has done in terms of the wide economy, that study is available. A lot will be shared in our sustainability reporting. And maybe I can add one other interesting statistic. That study established that the fund had supported 1.9 million jobs in the last 10 years. And in that recent year, the number of jobs the fund had supported were in excess of 300,000. So again, if you want impact, I think we have more than enough. And as I said at the beginning, I don't think you have so many companies, actually any company in Uganda that has taken their sustainability reporting a notch higher to measure impact. So that's the first question. Now I go to my friend Malcolm. The question on the dollar.
Let me clarify before that, because the MD, I think the way he put it, you may get it wrong. There is further depreciation. There's going to be further depreciation by 10% through this year and by the end of 2026. My question was, does that worry you? What in your planning do you think, what are you saying to yourselves in as far as the depreciation of the dollar is concerned? And in considering, JP Morgan, Reuters surveys, it is like everyone across the world in global markets is concerned. Does it concern you? And that's the answer that I want to think.
I think the simple answer to your question, Malcolm, it doesn't concern us because we've diversified the entire portfolio, right? Like Ken said, we are increasingly diversifying our portfolio. So today, in excess of 80% is money invested in Uganda. So even when you see, the currency markets being volatile, I think we are cushioned by the fact that a big chunk of the actual investments are invested in Uganda. But maybe to take you a little bit further on that view, on that study that you're referencing, at the beginning of the year, when Trump had just been elected, the point I'm trying to make is that views on the direction of the dollar change depending on what is happening in the market. 6 months ago, the view was that the dollar was going to strengthen. And that was on account of the tariffs that Trump was threatening to introduce, right? Because the impact of tariffs, what basically does to the American consumer, it increases their cost. Now, that one has the effect of bringing about imported inflation. Now, you would expect that the Fed would react by increasing the Fed rate. Actually, they stayed the decision, waiting to see how the entire thing was likely to play out. But of course, a lot has changed since then. Trump has, he has backtracked on some of his threats. He's cut a couple of deals, but it has also helped matters that the stock market in the US has actually been performing well. So the innovation, the AI, has actually continued to see flows getting into the US to take away the net effect that companies would have suffered if investors were having to push on the costs in terms of increase in prices. So today, you're right when you say the general direction seems to be to a depreciating dollar. Like Patrick said in this presentation, if the dollar is weak against the shilling, because we translate our performance to Uganda shilling, if we have a lot of assets invested out of Uganda, it will reflect as a currency loss. But like I said at the beginning, we have mitigated that effect by having a lot more investments in Uganda. And when you heard from Kenny's presentation earlier on, I mean, the performance in Uganda was excellent. The stock market in Uganda here was 40%, Kenya was 25%, Tanzania was 17%, Rwanda was 3%. If you have counters like MTN giving you in excess of 60 billion, Airtel giving you 36 billion, I mean, that one actually just goes to prove that we've actually foreseen the risk and we've taken measures to mitigate the adverse consequences to our performance. Thank you.
Malcolm, just to add a bit on what Gerard has said, there is where the entire global world suffers. The US is the largest consumer. What happens if they can't buy that much from China? Will the Chinese have enough money to come and do our roads? Maybe not. So there is this side effect that could take place because of the global dynamics that take place. The advantage with the fund is we are not directly invested in a dollar-denominated asset. Yes, we have. Kenya, Uganda, Tanzania, those are economies that are cross-rated. And like I said, if the dollar depreciates against the Uganda shilling, it also depreciates against the Kenya shilling, also depreciate against the Tanzanian shilling. Is that cross rate that then we have to say, what effect will that have on it? But globally, if you have got an issue with a major economy, there's a possibility it could affect the other economies that we trade with, and that could have a certain effect. Now, to begin worrying about that at this point in time, we worried so much about Ukraine. People, we thought at one time that Ukraine was going to be the downfall of Uganda because everybody was, we've survived in that case. Last question I want to touch on is the interest rate question. Mr. Wamala, you asked that question, and I want to take a bit of time to explain. The law as written has certain advantages, has certain disadvantages, and you need to take it in totality. The issue of the interest rate was amazing. When the NSSF Act was established around 1985, there were other schemes across the world, especially those that were under the British government, under the Commonwealth. Similar provisions in the law were made, both in terms of eligibility, contributions, and the most interesting thing was interest payment. So one of the things that a fund as NSSF has to offer, the first attribute is not a return. I know we focus a lot on the return. It's not a return. They're very careful that the law did not emphasize the return. Why? Because they wanted the number one attribute that this fund should offer, any pension fund should offer, is safety. When you become eligible, your money is there. So what the law did was to deal with the return issue by forcing the employer, in Uganda's case, to double what you contribute. You put 5%, the law forces the employer on day one to match it, actually double it in Uganda. You put 5,000, the employer is forced to put 10,000 that very day. That money belongs to you. It's yours. The employer can't touch it anymore. It's yours. And many times when you talk about a return, we forget that aspect of it. For many of you who have put money in a unit trust or in a savings account or now in Smart Life, if you put 5,000 shillings, that's it. You don't have any other match coming from anywhere. So to safeguard pensions from now chasing returns, because remember, when you begin to chase a return, the higher the return, most likely the higher the risk you're going to what? To undertake. To safeguard pension funds from not chasing returns, they then made the return perspective not critical. That's why you put your money in for that first year. The idea was, no, don't be reckless. Because the return equation, we already done it, we already doubled that member's money the first time. And it's fine. Because you got double your contribution on that day that you put it in. And many times we forget that. Now, in the second year that you come, now this is now a question of mechanics. The interest rate that we announce in terms of just revenues we got, we distribute it all to the members. It doesn't matter whether I give it to you in a quarter, I give it to you in a year, I give it to you at the beginning, I give it at the end, because the quantum of the revenues we made, I gave it to you. The return percentage just becomes a mechanics because the entire revenue, once we've netted out our expenses and taxes, is given back to the member. So I'm explaining that to you because it's not as easy as I put my money in a unit trust. This was the return you got. No. Take it in its entirety, and you'll see that an investment in the fund. That's why we tell members, please don't allow an employer to cheat you, because your investment in the NSF that first contribution attracts a 200% return on day one. And I don't think you'll ever get any other investment somewhere. I know it's convoluted, a bit long, but that we need to shape so that members can understand. It's one of the best investments you can ever made in this country. Thank you. I think we're done.
Thank you so much, Patrick. So I think all of us are very confident that from day one, our investments are doubled. So we can actually just even not announce the return because you've already gotten a return. But just speaking again to that question, someone asked for the actual law that gives us that mandate. And you can refer to the NSSF Act as amended, Cap 230. Go to section 33. You can read 1, 2, 3, 4, until actually 7. It really specifies clearly the treatment of interest for the member. Probably I'll just read just one aspect of that clause. Subject to this section, interest at the rate declared by the minister responsible for finance, calculated on the balance, standing to the credit of the account of the member of the fund, on the first day of the financial year, shall be added to the account of every member of the fund for each financial year, throughout which it has been open if no benefits has been paid out. So we derive that actual computation of interest from section 33 of the NSSF Act. Remember, we initially had the NSSF Act, Cap 222, but when it was amended, it became Cap 230. Please look for that act. Acquaint yourself with it. Thank you. We'll move on to the next set of questions. Yes, please. Yes, okay, thank you. This is the last round of questions.
I'm Isaac Omading from the Vision Group. I wanted to find out, beyond interest rate, what is the fund trying to do to make itself attract to the savers? Are we looking at things like health insurance, mortgages, and so forth for the savers? Apart from the interest rate and the trainings we give the members, are we trying to, is it possible to get members covered health-wise under health insurance and support them on mortgages? Thank you.
Thank you. That's all, eh? Oh, wow. You've been a great audience. Okay. So we saved the best for last. Speaking to Isaac's question, beyond interest rate, what else are we offering our members? Okay, so first of all, our value proposition to the members is one, safety. Your money has to be safe. When you come back to us, you must find it any single day. And then, of course, convenience. You have to access our services wherever you are, easily, you know. And then, of course, preserving your money, and that is why we always talk about the average 10-year inflation rate and ensuring that we give you a rate that is above that. But more to that, we also look at the value proposition. Why should you choose NSSF? And of course, we also have a challenge. We have to balance, because the average payout for a member is 25 million. Now, that speaks to adequacy. And every time you talk about a new benefit, you have to ask yourself, how am I going to finance this benefit? So if we use that 25 million and say we are going to use it to finance health, we are going to use it to finance a mortgage, you know, it might not be adequate. And yet we want to ensure that when you retire, you have some money that you can use to meet your other needs. So what we are doing for now, the approach that we have taken is to encourage you, while you're still working, to consider the voluntary side. and use the voluntary side to finance your short, medium-term needs. And starting off with Smart Life Flexi, which is the product that we've rolled out. The average return on that product actually, last month it was 14%, but on average we are giving 13% per annum on that product. So whatever you give us and starts earning interest on day 3 on that product. And it's a very seamless product to use. You can enroll even right now using your app, start saving as little as 5,000 and give yourself a goal probably of 1 year, because we know that you're funding your short-term goals using your bank accounts, mobile money, unit trust, but you might have an objective. Probably in 1 year, you maybe want to buy a piece of land, or you want to buy a car, or you want to pay for your child university education. And so if you do this, you'll find that it's actually, saving is becoming a way of life. I personally, usually after sending money, because usually, of course, when you're in a position of responsibility, you have many responsibilities. So after making several payments, whatever remains on my mobile phone, I actually just say, let me reward myself. I send it to my Smart Life account, you know, whether it's 5,000 or 10, and I am seeing my money is growing. So that is the first offer to the members. Let's help you make saving a way of life so that you can actually meet your medium-term goals. Secondly, the issue of medical insurance. We have actually product proposals that are looking at micro and then Medicare, which is the equivalent of what many people whose companies are paying for medical actually enjoy at the moment. But like we said earlier, we have to address the issue of how is this going to be funded in a sustainable manner. And so the MD earlier in his presentation mentioned Smart Life Fixed Term, whereby for those who are accessing their benefits, we can manage that money for you, put it in a deposit, give you a good return, which is then broken down into interest payments, and part of that money is then used to finance your medical care. So that is the first level that we are going to use to approach this market. And the beauty of that product is your core deposit is actually preserved. It's not eaten away. It is preserved, so the money is actually working for you. We are, of course, considering several other attributes and several things we can do, but for a start, that is what we are working on. And I want to encourage each of you to just enroll for Smart Life Flexi, because you'll feel you're managing your finances better. Thank you so much. And that brings us to the end of this session. I just want to appreciate each and every one of you for being, first of all, a very great audience. I want us to appreciate the management team for doing a great job. I think you're very confident that your money is being managed by the right people. Even if you woke them up and asked a question, oh, Temangalo, yes, Temangalo, the title is here. I think Agnes would. So we definitely ensure that we really manage your money very well. Thank you so much. This year around, the fund celebrates 40 years of existence. On 1st December 2025, we'll be making 40 years since the NSSF Act was assented to on the 1st of December 1985. So 40 is a great number for us. We'll keep engaging you on the various initiatives, starting with the NSSF run, and then the annual members meeting, which is happening also soon. Thank you so much. And the Customer Connect Week. Thank you. And on that note, allow me just to appreciate the customer service team that is here. Jackie and Grace, please wave to us. Welcome. Thanks for attending. Yeah.